order to build that, you have to think like a fintech, act like a fintech, but build a tech like a fintech, but at the same time have controls like a bank.
Thanks for joining us. If you're listening to this on YouTube or on our various podcast channels, it's my pleasure to host my friend Ramana, who's the CEO of Magnati. If you don't know Magnati, it's one of the leading payment companies in the UAE with plans to expand and succeed across the region. Ramana, hello.
Hey, good to see you, Ronit.
How are you doing?
Thanks for having me. I'm good, thanks.
Did I explain your role clearly, or do you want to add anything?
Absolutely, absolutely. Yeah, when Urvi introduced and said we are a payment processor, I sort of like stopped a bit. And I said, no, we're not payment processor. We are a payment platform or a payment services or a payment company.
Yeah.
And that's it. And that's the only change.
Yeah, absolutely. What is it you told me once? You want to be for payments, like what iTunes is for music or something? I can't remember. What was the line?
No, we want to be for payments, App Store. We want to be the App Store of payments.
App Store. You want to be the App Store of payments. Yeah,
that's right.
I remember you told me that. Was that a year ago you told me that line? I can't remember now.
Yeah, so when we created Magnati, the whole purpose and the vision of what we want to do, if you look at our vision, we talk about transforming payments into possibilities. So, the possibilities don't come by selling a POS machine or selling a payment gateway.
Right.
The possibilities come by opening up a payment experience into, multiple factors like, new growth opportunities, right? How do you drive new revenues by using the data, monetizing the data? How do you drive new revenues by completely innovating the customer experience? How do you drive new revenues by, killing the money in the black box, as they say? A lot of governments have this problem where the money is stuck. And then when they do the budgeting, they would not be able to take into account the money stuck between the ministries or individual ministries. And then there's always a balance of budgets that keeps happening. So how do we cut the whole money in the black box and call it the real time view of the money? So you can actually increase the commerce. And the possibilities around what we recently call the experiential commerce. I think that's what we want to do, and that's what it's all about. And we don't want to be another processor. The idea is not to create another processing company. Yeah. It's about creating a platform.
Creating the App Store of payments, a platform.
Okay, creating the App Store or a Play Store. I don't want to be.
Play
I want
Store.
To be neutral,
yeah.
right?
You want to be agnostic, right? Operating system neutral or device agnostic. Yeah. App Store, Play Store, something store, the everything store.
Absolutely. One-stop shop. Simple terms.
Now you said
it's a sorry to cut you. It's a pretty good, something very close to my heart, and I always believe in it. I mean, see, and this is where Apples and Googles have done very well. If you look at the App Store or a Play Store concept, there are many apps which are competing products of Apple or Google that are available, but there's only one platform. There's only one store. Our idea is the same. We want to create a platform where our merchants or customers would have opportunity to look at or to view multiple competing solutions available on the platform. But at the same time, there is only one platform. That's Magnati platform. There's only one way you connect. That's through Magnati's API stack. I think that's the difference.
Right. So if we took it to a really high level and said, Fab's payment business 4 years ago, or Mashrex or another bank in the region 4 or 5 years ago, versus your vision of what you want to build today with Magnati over the last 6-12 months going ahead, this platform, can you just talk about what are the big differences between like where we're coming from in the world of payments, not just in the UAE, but globally, say half a dozen years ago, to what you're trying to build, a vision? Like, you just unpack that.
Yeah, sure.
Throughout some phrases like APIs and platforms and.
Absolutely. A lot of change is happening, predominantly coming from two areas of it. One, technology, two, the business, right? How the business is going. So if you look at traditional banking systems or companies that are formed from banks, we always had the challenge of monolithic setups. And then the fintechs who came in always had an option of building it on a cloud or building it, in conjunction with APIs and the new generation technologies, right? There is also a bit of the other side where if you say I'm a fintech, you are always given an easy way to do some like digital onboarding. Whereas if you're a bank, you're always told by the regulator to go through 1, 2, 3, 4, 5 process, even if you have the technology to do. So the clear thing that changed in the last 4 years after we set up, after the merger of NBAD and FGB, and where under the leadership of Hannah, we created an independent payments unit under consumer banking. And this payments unit and she was very clear from day one that we have to be different. We don't want to sound like a banking. And Ronit, you've been in, you're talking to a lot of fintechs. There is a particular business that used to be a banking business, which is going to go away. This is the business that is going to be taken over by tech companies, and your big techs are already doing it. And the amount of money big techs are investing in payment side is phenomenal. Because what payment does is previously, if you are a merchant, if you go and talk to a merchant, they used to think it's a cost. They used to look at it as transactional. What we changed in the last 4 years as Magnati or as Fab Payments Arm was the mode of completely going into the merchants and telling them that we are here not to reduce your costs, but to reduce your cost to income, right? We are here back to the possibilities, to generate new opportunities for you. And through behavioralization of payment data, there is so much in it that you can churn and create and monetize that it's a whole new ballgame. So what you do today as payments, or what we used to do as payments, has now become BAU, or what we call the base. And on top of it, there's a whole world of value-added services that have come in. And that is a big difference. And in order to build that, you have to think like a fintech, act like a fintech, but build a tech like a fintech, but at the same time have controls like a bank. It's the most important thing. If you're going into the market, I mean, a lot of people say, oh, why you don't do this? Oh, why you don't do this? And we tell them, the merchants trust us. We are processing hundreds of billions, and we have to ensure that the merchants trust us. It's not a game where, oh, I'm just testing this technology and maybe it fails, maybe it's not. No, we don't have the choice. Fintechs have the choice. So I think that is where we are between the tech upgrade, between the tech revolution, and ensuring the necessary controls are in place. So that's the way we have evolved. We have moved on, and today, we are very happy the way the bank and the leadership and the senior management invested in this tech, and the whole idea of converting monolithic to API stack, moving away from a very hard-coded technology models to a completely modular, broken down, and API calling any APIs, either the API belongs to a company A or a company B or Magnati. The core API of Magnati calls any of them. That is the power of working together with fintechs, but being part of the same platform, right? I go back to the platform, and that's where it all works well. And that's the future. Now, what is shaping that up as we keep increasing and improving is the world, the way technology is changing now. Previously, if it's X, now it's become 10X. And now we are sitting in, like people like me, I regard people like me and you as 2.0, where we are the ones who have money. We are the ones who are used to making payments by cards and so on. And we have 3.0, who are the kids in the block, the new kids. And they are the ones who are playing in Minecraft and Roadblocks and others. And for them, they don't have money, but they know the experience, right? So that is where Magnati's next 4 years is about building what we call the experiential commerce.
Great.
So Ronit, we have carved out a word called experiential commerce.
Experiential commerce.
Yeah. So that's what we are working on. Absolutely. Absolutely. Awesome. That's what we are working on.
I need I need to go and press pause on my, I have a 190-page Metaverse report about to print this evening. So I better go and hit pause. So I've put in this word, experiential commerce, into it.
It is. I mean, Metaverse is different things for different people. I know some people look at it from a real estate perspective. Some people look at it from an NFT perspective. We look at it at Magnati from purely experiential commerce. So we are going to be the first Metaverse who will be connected to traditional payment rails, right? Where the two generations come together. Where you can still go and, you know, today, if you look at the experience you have when you go to a marketplace, is you buy products using two-dimensional pictures that are available. And many of these products get returned because, oh, the size didn't fit, or the color is not what I thought, or this, or that, or that. And what is missing in this is an experience. So your commerce is driven by two-dimensional. Now we're calling it multi-dimensional. And this is where we call this is the advent of experiential commerce. So if I'm allowed to go view the product, put the Rolex on my hand and see how Rolex looks on my hand, and then buy it, integrate it to the same card rails or to the same payment rails, which are today regulatorily accepted, we have created what we call the 2.5, the link between 2.0 to 3.0.
Sure. So in terms of in your vision of the metaverse, you expect the payment rails to remain the same as they are today, a card-based payment rail?
Again, card, I won't say card, it's a token-based payment rail. Now the token can be card, token can be account, token can be cash. Tomorrow, if regulators approve the tokens to be crypto, not a problem. We are a payment company which drives the rails of passing tokens, right? I mean, in simple words. So and the tokens have to be regulated, the tokens have to be approved by the regulator. But what is important is the experience. So, you know, I mean, as we keep rolling out and talking more about our products once we roll out, but the key is about, you know, when we go into Magnati Meta V, that's what we're going to call our Metaverse, Magnati Meta V, Meta V. So you're going to have opportunities of, you know, like imagine this is a building with multiple floors, and in the first floor you have a supermarket Meta V where, you know, we can go to brands and create their supermarkets. Like, you know, for example, you want to create a supermarket in Dubai Mall and your same supermarket in Abu Dhabi Mall. We can actually create those exact replicas of aisles and views, because as a customer, you're used to walking into that aisle in a Carrefour or a Lulu and know exactly where you know the products are, but now you're experiencing it and pulling the products and dropping it. Now the beauty of having it on the blockchain is, you know, when the product is produced, when the product is shipped, how many ports has it moved, and so on and so forth. So you have all the access to that. Now that's the first part of it. The second floor is what we talk about, the events or a live event Meta V, where we would give opportunity to the production houses and the live event hosting companies, etc., to come onto our metaverse. And for the first time, I mean, this is pretty close to me because, you know, I'm a Liverpool fan and I always want to be sitting at Anfield and watch the game, but I can't go because I live in Abu Dhabi. So now imagine I put my headset on and I'm sitting in the COP. Exactly, interacting with my fellow the fellow season ticket holders, and actually singing "You'll Never Walk Alone" and watching the players. Right now, this is the new generation, what we call the experiential commerce. Now, add to that, I will use my card to pay my ticket, because people should start using. I mean, there's always steps, right? Baby steps. The first step is let people come into the metaverse. Let people come into the three-dimensional journey, right? And once they come in and they use the same mode which they're comfortable with, then they start opening up to the aspect of, you know, WWW3, right? So again, there's non-stop. I mean, similarly, you have a education metaverse, right? What we call education Meta V. Now, why do you need to go to Oxford? I know you come from Oxford. I want to pick it up. To Oxford or to IIT or to Harvard, when you can sit in the world's universities and pick and sit in a live class by most favorite professor, right? These are all possible possibilities you're creating, and all you're doing is attaching that possibilities into the payment rails
and
to make it happen.
In this metaverse, and I completely agree with your vision of the value of experiential commerce or experiential media or social or sports. I guess the technology still has to evolve. We can't wear those headsets for too long. At least you and I. Maybe you can, as you're getting younger every passing year. But
now,
so
Ronit, again,
I get
they are evolving. They are evolving, right? Tomorrow it may just be your lens or anything that just opens up.
It'll be AR glasses or something, or even these 2D screens that we're zooming through could become more 3D. But focusing on the payments rather than the tech, the metaverse tech, think of the payments. How does payments need to be different? Now, forget for now, the crypto angle. That's another conversation later today or another day, but just sticking to the TradFi payment rails, the existing, whatever you want to call it, card payment rails, whatever. How does that need to evolve, if at all, to make it fit for purpose for this experiential commerce meta V world?
Yeah. So if you look at how it is evolving, it is really it's a great story of how we went back to the thin client, thick server models, right? Which were not today, which were designed ages ago. So the whole idea is you want to make the POS machine idiot. It's like thin client, and you want to move everything onto your what you call the API stack or a platform, which becomes your intelligent routing, value-added services, and so on engine. So today we have our data monetization layer that sits on this platform. So be it our POS machines, be it our e-commerce gateways, be it whichever way the front-ending channels are interacting, everything boils down to what we call the omni layer or a platform. And that's a single experience that the customers get, right? And then you add many ideas on top of it, whether it's face tech, whether it's iris, whether it's fingerprint, biometrics on one side, then the new technologies around buy now, pay later, other technologies around, lending through real-time decision making. I'll tell you a simple example. We have signed with few fintechs on lending, right? Most people forget the fact that when you're lending, it's the most lending to SME as a segment is the most riskiest business, right? Because you don't have much ability to turn up. But what we come in and give as value add to the people who underwrite is the strong is the ability around artificial intelligence of our artificial intelligence tool around merchant data. Today, how good you perform as a company is based on your sales and your inventory. If we can track them and give real-time decision-making insights into the people who have underwritten, saying, guys, you have a chance of turning this into a bad loan, or you have a chance that they're overperforming, come and put in more money or lend more, change your pricing dynamically. I think we have hit the nail on the head. And that's what we have done today. And those APIs are available. And we're talking to many fintechs who are willing to underwrite this risk because we now have the decision-making AI tools that we provide as service to these people. You are now moving into platform. Remember, and that's where when people come into your platform, they need to visualize the benefits they're going to get. And that's why people love to work with us.
The AI-based lending or data for lending that someone else does, is this live? Are fintechs using that? It sounds a little bit like, I guess, what Square does on its own proprietary data and then lends on the back of it. Or there are similar companies in India and China that do it. So this is live in the UAE now?
This is live. So we have it today. But this is, so insights are ours. This is our IP. We build the insights. We give as a service information for fintechs to take action on that. Not just fintechs. Today, we're talking to banks. I mean, of course, we will integrate with Fab. There are other banks who wants to do it. For example, if the merchant belongs to a bank A or B or C,
sure,
we can give that opportunity for everyone to take these as insights and underwrite and take a decision. Decision making is their responsibility, but the power is with us. Not only that, Ronit, we have now insights around your location. So let's say you're in a mall. We actually track the footfalls of the neighboring merchants and actually tell the healthiness or health check of you as an insight to the people who are underwriting it. You know, these are the insights nobody had. For example, if you're a shop in a mall, your next shop and on to the right and the left have 50 footfalls in a day, and you're only having 2, there's a problem, irrespective of which business you have.
Yeah.
Right. So, and then if you have 100, it's good. So you need to get better access to funding because you're doing good. So I think these are the insights which SMEs themselves are worried why the overall financial system is not helping them. And these insights are the ones which actually make a lot of help both ways, protecting your underwritten lending as well as giving or having access to new financing sources.
And talking a bit more about partnerships, and you talked about being a platform, so that obviously creates opportunity for partnerships. You know, you and I have talked about both the good things fintechs do, the value they bring, particularly in areas where banks are a little bit slow or haven't been fast enough. So there's value they bring, but there's also a fair amount of hype with fintechs. So I'd love to hear your thoughts on what you think works in terms of real value add. And maybe we could talk in the UAE context, or we could talk more broadly from a US or India context. What do you think works and what's a little bit faddy? You know, it's a bit of a fad. And
yeah, I think we have now signed, this year we're going to work with about 28 fintechs. By end of this year, we'll have fully integrated 28 fintechs on our platform. The power of them, the good part they bring onto the table is very niche, very focused few technology solutions, which are absolutely amazing to bring them onto the platform, right? You know, the ones we're working around intelligent routing of the transactions. How do you, unless a merchant insists, how do you dynamically route a merchant payment into 8 or 9 payment gateways, right? Depending on the low cost approach or the best efficient approach, so that the merchant transactions would never fail. Today they have, the transactions are linked to a particular gateway. Today we have, 8 or 9 gateway partners. So we can intelligently route that. So we have that routing model we built, right? And it's built through partnership with fintechs. We are working on our Metaverse also through partnership with fintechs. We are working on, POS lending and lending also, we have buy now, pay later, we work with fintechs. So there are some fintechs who are very good in their niche areas they work on. There are some who actually come out and they say they have this amazing, but they forget that in isolation, that's amazing, but you got to put it into the banking system to make it work. For example, you may say on-click onboarding. It's a great tool. And there are many fintechs who tell me we can onboard a customer in 1 second. I'd say, but what about compliance screening? What about sanction screening? What about this? What about that? Those are additional layers on top we need to put. I said, guys, come on. It's a turnaround means end to end, right? So I think, the good part is the fintechs we work with are very clear and passionate about working together with us. We grow together. And we invest and co-build. It's all about co-building. And if they see the value, why would they go to others, right? They stick with you, they grow. And there are people who want to go to others. They can, again, it's all about, do you want to be the preferred player on the platform? Always, even if you go to App Store or Play Store, they throw up the ones which are preferred in terms of rating and the ones which are not, right? So.
And if you look over the last 3 or 4 years, and I'm thinking fintechs in the UAE, but again, you can take this question more broadly. How do you think they've changed compared to what they were saying or doing 3, 4, 5 years ago to today in 2022?
Yeah, I think when the whole market opened up and fintechs came in, and due to advent of cloud and other technologies, everyone thought that they're going to replace banks today. Not just banks, any existing players, whether it's insurance, whether it's banks, whether it's even supermarkets, whether it's global payment, I mean corporate payment schemes like Swift. A lot of people talked about taking them out. So it was a war, right, when they came in. And they later realized that you cannot have wars in the global world we're living in. You have to have partnerships. You got to co-build, co-work, co-develop. And I think that's what we've seen, massive change in the way fintechs have started working and the way we work with fintechs. So both of us have to come onto the table, work together, build a concept, build a partnership, and grow together. If any one of us don't see the way forward, then there's a problem with the partnership. Right? But at the same time, you got to understand where your value add is. Our value add as Magnati is we are the integrating API to our merchants. Our merchants trust us, they integrate with us. And when we say this fintech is part of our platform, we have ratified, secured, ensured that they are a trustworthy partner to come onto our platform. So our merchants believe in us. And what's in it for the fintech? The fintech comes in, works with us, the solution comes onto the platform. They don't need to sell. We sell it for them. You already have a brand like Magnati behind you. And when Magnati says, I have a solution X on my platform, that means, we trust them and we work with them. And by default, every merchant now has access to that particular solution. It's a win-win. And we grow together. We have to grow together. And that is the whole concept. There is no way in the world one company can build everything. There is no way. It has to be a partnership. It has to be co-development. And I think that's a direction we all are moving into, and we're already seeing it.
Interesting. One last question for me before we wrap up. We've spent a lot of time talking about the metaverse, or the experiential economy, or the experiential commerce. And what's the role of the UAE? And I'm asking this because you're based in Abu Dhabi, and normally I'm based in Dubai. I'm doing this from London, not Dubai, but normally, what's the role Abu Dhabi, Dubai, the UAE is going to play in the metaverse? And hey, isn't the metaverse meant to be this virtual borderless world anyway? So should I even be thinking about it like that?
I mean, absolutely. You have to start thinking about, governments, regulators, and everyone fully supporting what you're doing. That is the reason why we are saying, while the experience is metaverse, the transaction and the flow and everything has to be integrated into traditional rails.
Yeah.
You have to ensure that regulators are absolutely comfortable with what you're doing.
Yeah.
You have to ensure that even we and the customers are comfortable with what they're doing, right? Because, in Metaverse, the first few layers of identity,
Sure.
authentication, and these are still layers where people haven't yet broken the ice.
Yeah.
So when those layers are not comfortable that you can rely on, you go back to the layers you are comfortable to rely on, which is the 3D secure, the authentication layers, which are working and being extremely secure. Now, as we keep growing up, and as more and more regulators and authorities start approving these, many other tokens, forms, cryptos can come in and become part of this journey. But again, these are, in my humble opinion, these are all form factors. Form factors don't drive your experience. Technology drives your experience, right? It doesn't matter whether you tap or you used to enter the PIN before, or you used to max stripe before, you still made a payment. But your experience changed. That is what we want to do as part of our experiential commerce.
And it's a really interesting point, right? That we're talking about almost virtual or integrated immersive worlds, the physical and the virtual together. We're talking about this kind of borderless world, I guess, in the future, yet at the same time, we as human beings, we exist in the physical space. We have legal identities. And sometimes we forget that you need regulators to be on side.
You have to.
And
there's no doubt about it.
And also, it's not our term, but the entrepreneurial state. I think what really strikes me, and you've lived in the UAE for much longer than me, but you need an entrepreneurial state rather than a bureaucratic state. Basically, a leadership team, whether it's of a company or in this case a state or a government, that's willing to embrace the future. And so I guess you and I are lucky in terms of where we're based.
Absolutely.
Ramana, thank you so much for joining us.
Thank you so much, Ronit. Absolutely. And, thanks for having me. It's really nice. And if you need any insights to change your 190-page report, I'm available.
The 190-page report's already, it's done. It's going to drop. In fact, by the time people watch this, it'll probably be out already. But if you and I want to, maybe we can jive over it on another.
Absolutely. We're waiting for, very soon we would actually launch it, and we would be sharing the POCs.
You can share it as an insight to all your clients, Ramana. I'll give it to you for free.
Absolutely.
How's that?
Please. Thank you. Of course. Can't wait for that.
Jokes aside, it's been a pleasure to host my old friend Ramana today. Gaurav sends his best wishes, my co-host. He is currently probably recovering from his parties in the West Coast. Sorry, Gaurav, did I say that out loud? But normally Gaurav and I co-host this. Nothing personal, Ramana. He's just having a good time.
Absolutely.
Take care.
Thank you. Not a problem. Thank you.